does Section 24 work when you run your own business and are taking salary and dividends? Let's have a look at the numbers. I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Section 24 is an interesting computation and there are many curveballs in it to determine when and what you will include. So today what we're going to do is another Section 24 calculation example, and we're going to specifically look at one where we've got some additional complications or a different scenario. Today's scenario, we are going to be looking at probably someone who has their own company, they've got some rental income and they take a salary from their own company. And to top up their income, we're also going to add in some dividends. Now, this will therefore give us hopefully another example on the channel for how it fits together. So hopefully you can see how it may affect you and your personal tax position to throw in the numbers and see how it fits together. Let's dive in. So in our example one, we've got a director who has their own company, so they are taking a salary of the $12,480. They're also taking some dividends from their own company of $22,000. As we're doing rental calculations, we would have to have some rents in that are in their own name. So we've got $15,000 from buy-to-lets, HMOs, whatever the source. On this one, we've got some mortgage interest that we are going to be claiming, which is at $2,500. And the final piece of the puzzle is the other expenses for our rental property, which we have got in at $2,000. Now, the first thing we're going to look at is what is our actual gross income for this person. So their gross income is going to be calculated as their income from their salary of $12,480, their dividends of $22,000, their rents of $15,000, and their rental expenses of $2,000, which we will deduct off, which then gives us a gross total income of $47,480. We also have our finance costs, which are dealt with separately, and we've got those of our $2,500. So let's dive into the tax calculation to see how much tax this individual is going to be paying. So we first start off with our personal allowance, because we're all allowed our personal allowance, which is at $12,570. There's no tax on this, so this is all at a 0% rate, so we have zero tax to pay on this part of our income. We then look at the next bits, which are in our basic rate band. So these are the things that are going to be taxed at 20%. Now I've got a figure here of 12,910. This means that the figures that we've taken are basically our income that we've received from our salary, the $12,480, our rental income of $15,000 and our expenses, and then we've taken off our personal allowance to get to the amount that's going to be taxed at the 20%, which means the tax that we will pay is £2,582. Now the next thing we go on to is looking at our dividends, and we have our dividend rate section. And our dividend rate is for £500 from the 2024 to 2025 tax year onwards, and this amount is taxed at 0%, so we've got no tax on that. The next section is what we've got at our basic rate band, which is taxed at the 8.75% tax rate. So we've got 21,500 as we've taken our 500 at the 0%. So we have got £1,881.25 of dividend tax to pay, which is giving us a total gross income here of the 47,480. So that matches, and the tax that we're going to be paying is at 4,463.25. However, we've not yet accounted for our finance costs. So now we need to look at this in a slightly separate location. So let's move to the other side of the page here to just show you what is going to be used in this calculation. Now, as you may have found on previous Section 24 videos, we need to look at the lower of a specific group of things. So the first one is our finance costs, which in this case we've got 2,500 of finance costs. We also need to look at the property profits to see whether this figure is the lower figure. So this is going to be our 15,000, take away our 2,000 of expenses, which gives us 13,000. And the final figure we need is our adjusted profits figure. And our adjusted profits figure for this scenario is 47,480. So we're now looking for the lower, and as you'll be able to see, the lower one is our finance costs. So that is what we take back into our tax calculation so we can get this finished. So our finance costs come in at 2.5 at the 20% tax relief that we're allowed. So we have therefore got a deduction on our tax calculation of £500, which means our total tax liability at the end of the day is going to be £3,963.25. So as you can see, there may be a few curiosities around the calculation depending where the numbers are going, and as interest costs are going up and maybe property profits have reduced. Let's move on to our example 2 on that basis and have a look at a slightly different scenario where our dividends are slightly higher. So we're going to have the same salary because we're on a director's salary of 12,480, but our dividends this time we're going to go on to 35,000 with slightly different rents of 18,000 this time. And our mortgage on this one, they've got more gearing, they've got more debt on their properties. So in this case, we've got 12,000 of mortgage interest that we've got to account for. We've also got a few rental repairs. It's not been the best of years for this individual because theirs are 8,000. So there must have been a few bigger repairs. Gross income we need to now look at is our salary of 12,480, our dividends of the 35,000, our rental income of 18,000, take off our rental expenses of 8,000, which now gives us a total of 57,480, which means we are now a higher rate taxpayer. We also need to take account of our mortgage interest costs, which are 12,000. The tax calculation then. So we start in the same sort of way on this example, that we need to be taking our personal allowance as the first port of call, which is the same for all individuals until you start hitting over 100,000 income. So we're still well in that with our 12,570 that we have here, and that's with no tax, so that is going to be 0 tax to pay on that one. We can now move on to our basic rate section, and this is going to be at 20%. Now our number we're working to is 9,910, and this is because we have the 12,000 income, we've got our rental income, rental expenses, and take off our personal allowance to get to this figure, which is taxed at 20%, which gives us a tax figure of £1,982. So now we've taxed all of the lower rates of income, so now we can move on to our finance income and use our dividend rate, which we, as before, had 0% for 500 of those dividends. Now the rest of those dividends are going to either be taxed at the basic rate or the high rates of tax. So our basic rate element is at 8.75%, and this is for 27,290, which is taking us up to the basic rate threshold of 50,270. The tax that is then payable on this amount is 2,387.88. Now we've got some tax at the higher rates of tax at this point, which is the 33.75% tax rate. And this is all the income that's over our threshold of 50,270. So it's 7,210, and this is at 33.75%, so we've got £2,433.38. Total income matches up of the 57,480, and our total tax now is sitting at £6,803.25. So let's throw over to the finance cost side of things and see what is the lower of our three numbers. So the first number we're looking at is going to be our finance cost figure, which is going to be the 12,000. The next one we're looking at is the rental profits, which is our rental income of 18,000, deducting the 8,000 off it, which makes 10,000. And our final figure is our adjusted profits, which is our total £57,480. And the key thing here is we're looking for the lowest, which is actually our property profits. So we can now take that figure back into our calculation, and it's the 10,000 at 20%, which is 2,000. This will get deducted off our 6,000 we've already got to give the final tax liability that we need to pay of £4,803.25. Now it's important to note that we've not used all of our finance costs at this point. So we had finance costs of 12,000, we've used 10,000 of them, so we do have 2,000 that we are now carrying forward. But as you can see, it's not always quite as obvious as you may think. Hopefully this has given you an idea of how the different tax calculations work, and you can start plugging some of the numbers into your calculations. As you can see from the two examples there of similar but slightly different positions, there are different ways that this calculation will throw depending what you are putting in. So if you are in a similar position, hopefully this gives you an idea of how it may affect you and how your numbers will come together. And hopefully that just gives you a good understanding to have a go yourself with what you are looking at. As we know, there are several different ways this computation will go, and it will be determined by how much tax you are potentially paying. With each different income category, it may throw things into a different way depending on what needs to be taxed at what rates. If there are any other scenarios that you'd like to see, then please do leave a comment and we can add in more examples on the channel to show how different methods work with section 24 so that you can kind of get an idea of how yours may be affected by these calculations. Hopefully today you can see how the numbers work and how the calculations fit together when you have your own company and you have a salary and you have dividend income. Hopefully this gives you an idea of how yours may fit together. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel, and let's make tax less taxing.